Alright, top investor says XRP will surpass Bitcoin, and here's why. So the question is, why did super tech take a backseat in the crypto race? So look at the top of the cryptocurrency charts today. You see Bitcoin sitting comfortably in the number one spot, wearing the crown like it is completely untouchable. Most people assume it earned that spot because it is the absolute best piece of financial technology ever created. But what if I told you that Bitcoin did not become the king because of its product design, its speed, or its efficiency? In fact, what if the very mechanics that built Bitcoin's throne are completely outdated and a structural migration of capital is quietly moving toward XRP? A major revelation just dropped across social media from a well-known crypto commentator on X, digital asset investor. They laid out a historical data-backed case explaining that Bitcoin's dominance was merely a byproduct of forced trading routing, not superior utility. As the rules of global finance shift toward absolute compliance and automated efficiency right now, the structural advantages are flipping heavily in favor of the XRP ledger. We are tracing the data from 2013 all the way to our current market conditions to show exactly why the landscape is transforming. Alright, so how did trading pairs artificially build Bitcoin's throne? To understand why the market is about to rotate, you have to look back at how we actually got there. In the early days of crypto, if you wanted to buy an alternative asset, you couldn't just use cash or instant stablecoin. You were literally forced to buy Bitcoin first, transfer it to an exchange, and use Bitcoin trading pair to access anything else. Digital asset investor brought up historical data from Grok to prove this point, showing from 2013 to 2020 to 2016 that BTC USD pair entirely controlled the flow of global liquidity. Later on, from 2017 to 2018, pairs like BTC USDT dominated. You had to use Bitcoin as the primary highway. Digital asset investor didn't hold back, stating that Bitcoin rose to its value because it acted as the mandatory gateway, not because it actually does anything unique from a tech perspective today. Now, here's my opinion. As a market observer, I completely agree with this breakdown. Bitcoin was essentially the middleman of the entire industry by default. If you look at it objectively, it operates like an old dial-up internet connection compared to modern broadband. It is slow, expensive, and rigid. Investors didn't choose Bitcoin because it was a superior product. They chose it because it was the only bridge available at that time. By default, dominance is not a permanent shield against technological evolution. Now, why is the regulation completely swapping the global liquidity flow? The landscape began shifting heavily between 2019 and 2023 when stablecoins and alternative layers like Ethereum and Solana pairs entered the mix. But the real game changer is happening right now, this year of 2026. Digital asset investor points out that as global compliance and strict regulations tighten across every major jurisdiction, the assets that are built for compliance are going to absorb the institutional money. This is where the combination of Ripple's stablecoin RLUSD and XRP comes into play as the next monster liquidity pair. Unlike Bitcoin's network, which is rigid and resistant to updates, the XRP Ledger allows developer to issue tokenized assets directly on top of it. Every single new project, stablecoin, or tokenized real-world asset built on the ledger adds immediate liquidity to the entire ecosystem. And now here's my opinion. Institutional money is terrified of legal gray areas. Bitcoin has survived on the narrative of being digital gold, but gold just sits in a vault. Big banks and corporate treasuries want an active network that handles tokenized capital markets safely. The XRP Ledger acts like a modern, fully compliant financial highway system. When the major liquidity providers migrate to a network that doesn't get them into legal trouble, the foundation under Bitcoin's feet will inevitably erode. Now, what do the latest on-chain data metrics reveal about the XRP Ledger expansion? If you think this shift is just a theoretical concept, you need to look at the hard data being pulled right now. Digital Asset Investor highlighted an eye-opening Evernorth report tracking on-chain activity on the XRP Ledger. The numbers don't lie. The market share of RLUSD on-chain trading on the ledger climbed from less than 1% to an incredible 12% in a window of under 18 months. Even more impressive, the specific RLUSD XRP trading pair successfully cleared roughly $900 million in volume in just a 6-month period. On top of that, look at raw network growth. Total active addresses on the XRP Ledger officially surpassed a massive historic milestone of 8.3 million in mid-2026, marking a brand new all-time high. Now here's my opinion. This data tells me everything I need to know about where the momentum is hiding. Going from 1% to 12% in less than 18 months isn't retail hype. That is a fundamental system integration taking place. It means real utility is locking in. When I see daily active address metrics spiking alongside massive stablecoin volume, it mirrors the exact structural setups that historically preceded major market expansions. The infrastructure is scaling rapidly right before our eyes. Now, can a network without smart contract flexibility survive the next era? The core of the argument comes down to adaptivity. Bitcoin is a single-purpose network designed to store and move its own native token. It cannot easily host decentralized applications. It cannot natively handle high-speed sovereign cross-border settlement without secondary layers, and it cannot seamlessly bridge tokenized real-world assets. The XRP Ledger, however, was engineered specifically to act as a multi-currency settlement engine. Digital Asset Investor tracks this exact limitation as the reason why the old king will eventually be replaced. As financial institutions demand automated features like native lending protocols, and permission decentralized exchanges, a network that lacks these capabilities simply gets left behind. Now, here's my opinion. From where I sit, watching markets daily, utility always wins the long game. Hype can sustain an asset for a few cycles, but eventually the economic reality of efficiency takes over. If an institution can settle a multi-million-dollar transaction in 3 seconds using an XRP pair for fractions of a penny, why on earth would they continue to pay higher fees and wait longer on an older network? The historical pattern that carried Bitcoin to the absolute top through forced pairs is now actively rebuilding itself around the utility of XRP. And finally, here is our overall conclusion. The narrative that Bitcoin will reign supreme forever is based on the past, not the present. When you look at the progression of trading pairs from 2013 to 2026, you can see a clear trend of diversification and a migration toward high utility, highly regulated environments. Bitcoin's value was constructed on an exchange monopoly that no longer exists. With the XRP Ledger setting all-time highs of over 8.3 million addresses and clearing near billion-dollar volume on its new native stablecoin pairs, the structural shift is no longer a prediction. It is an active process. Bitcoin may retain the status as a legal store of value, but as the primary engine of global digital finance, its replacement is already being integrated. The infrastructure of tomorrow is being built on speed, compliance, and multi-asset liquidity. And that is exactly why the crown is changing hands. And this finally ends our video. Thank you very much for watching and see you on the next one. Or you might just as well check this next recommended video right here.